Good morning, traders. Welcome to the Phoenix Blue morning update on Friday, the 4th of March. Only one thing really dominating the marketplace today. That will be the non-farm payroll announcement at 1:30 this afternoon. It's been a dominant factor all week. We've seen low liquidity because of that. So we'll be talking about that throughout the video this morning. Let's start off with the news. Since yesterday, we've had negative numbers out on the pound PMI services. Unemployment claims came in below expectation for the US, and ISM non-manufacturing came in roughly on forecast for that data. Overnight, had slightly disappointing retail sales on the Aussie, having had two or three really strong data announcements this week. We'll see later. We had hoped that we might just get a bit of a positive number there to tip us into a trade ahead of non-farm today. Okay, so what have we got today? Well, there it is. Nothing else really matters. Non-farm employment change forecast at 195, significantly above the previous level. Anything that is 20% either side of that figure will move the markets in a substantial way. Anything less, and we may just end up with a lot of volatility and a lot of chop. Okay, before we look at those charts, so the charts for the day, quick flick over to Asia. We're looking at the weekly charts today because we're at the end of the week. This is the US dollar Chinese yuan. We can see we've had a strengthening of the yuan through the week, but basically an inside bar within the preceding week, and really somewhat of a ranging price. Not a lot of significance in that. Over on the Shanghai Composite, we've had a bullish week. We started with a big gap down, and since then we've had bullish data, but only back up to this key level, which is the 2015 lows that we've been going on about all year. Over on the Nikkei, well, the Nikkei's had a really positive week due to there's a move in the markets. There's a more of a risk-off stance from investors. We've had news about Japan overnight. We had some more news, some information about one of the 4 board members who voted against the negative interest rate the other week. Their term on the board is coming to an end, and they're going to be replaced by somebody who is much more in favour of easing in line with the governor's strategy of doing whatever it takes to hit a 2% inflation target. So we'll be keeping an eye on the next meetings there, but it suggests we might see further cuts into negative rates by the Bank of Japan. Over on the US dollar, this is the dollar index. We had an interesting show of really how little liquidity is in the market. Yesterday, we were up at this level around 98.50, or just below the 98.50 level. 97.50 we've talked about a key level previously for our US dollar strength bias. Price was sitting sort of around this level. We were watching the euro charts because we had a trade in on that, only for this bar to appear. This is the 30-minute chart, and basically it just whipped down, stopped us out on the euro trade, and shot back up again. Some people would call that a stop run. I don't like that term. It somewhat suggests that it wasn't our fault, or we're not taking responsibility for the trade. It is simply a lack of liquidity in the pre-FOMC market that allows big moves for relatively small commitment on the part of investors or banks or whoever. This is the euro. Here's the trade that we had. You'll see that actually just prior to this, we called that we saw the 97.50 level on the dollar index, and we saw price coming to that. We anticipated that would stop out our euro trade, so we placed another trade at the same level, which is 1096, I believe, in order to be back in the position, exactly the same position. Although instead of having no risk on the table, we now have that position with risk on the table, so not all traders may have chosen to do that. But there you can see a perfect replica on the 30-minute chart of the euro. Okay, over on the pound, we had an entry here at this level on the pound through this level here. Some Phoenix Blue traders, depending on their broker, I believe were stopped out here overnight. Again, price moving around with a lack of liquidity more than you might usually expect. We have another level on the pound up here, which is probably a stronger level, but we'll be sitting here hopefully pre-non-farm payroll in a position to decide how we're going to or what risk we're going to leave on the table through the announcement, if any. The Aussie we talked about earlier, we'd had some really strong news through the week, which had given this really bullish move on the Aussie. Our stance overall is still bearish. We have an order at this level. As I said, the retail sales figures came in slightly below forecast. I believe had they been on forecast or fractionally above, they would have tipped us into that trade. Potentially that trade now won't happen before the non-farm announcement. But again, had it triggered, we would be considering our risk on the table against a single news event. This order will stay open till around 11 this morning. If it hasn't triggered by then, it will simply be cancelled. Over on gold, we've been watching a triangle formation here. We had a strong breakout yesterday. I've identified a level here or a zone here, and I believe what we've actually gone is with prices now just gone to market highs, or the current highs it's going to reach. We've a level down here at about 1180, which is a 168 pullback of that move there. That's where we'll be placing orders into next week, potentially, if what we anticipate happens and we do get that pullback there. Okay. Over on the S&P, we had this level here last week, which is a really strong level. We saw a nice reaction trading off that there. We took profits off the table at our first target. We had to stop at break even, and at that point that was taken off, but that was fine. We'd taken some profits and no loss. I had another look this week, and we've got another level through here around the 1990s. I put a weekly chart in here just to show how that level is. It's quite a strong level there. We're not looking to trade this through non-farm. I think non-farm this afternoon will determine where this goes. We'll either see a break above on strong figures, or a pullback low on weaker figures. So we weren't in a position to trade that short for the ahead of time, because that remains our overall bias on this market. But the short to medium term, just as likely are further highs through here. Well, not into this chart, but through this level here. Okay, so non-farm payroll. We need to be aware of what risk we've got on the table. We need all resting orders cancelled. If you're not comfortable, cancel orders. If you can get stops to break even that aren't so close to price that they're simply going to get whipsawed out, be aware. 1:30 is the time, and we'll have a look at what the results were on the morning update on Monday. Okay, just to remind you how we, how these trades we show you on here are based. We use clean charts, price action and horizontal levels. We don't use any indicators, no lagging indicators at all. We buy and sell with the banks. We only trade with a fundamental bias. We also overlay analysis of the commitment of traders report. We use 40 pip stop loss predominantly on FX, so that you can be more profitable with a smaller number of winners. and we believe we can seriously improve the results of traders using these methods. If you have some experience and would like to know more about how we might take you to that next level, please email us at info@phoenixblue.co.uk, simply to ask questions or have a chat, or without commitment. If you have any questions about this specific video, I'm available at tom@phoenixblue.co.uk. Okay, that brings us to the end of another trading week. Thank you for listening. Good luck with whatever happens with non-farm payroll this afternoon, and we'll be back on Monday to see what the results or the consequences of that data is. Thank you very much again. Bye-bye.